Hey folks, Dan Frio here with your real estate update for November 13th, 2023. So last week what we had the markets rally and we had interest rates come way down, and then all of a sudden at the end of the week, mortgage rates popped up. So what actually happened? Well, something happened the latter part of last week, and then some more stuff happened over the weekend. So let's get to that. But first thing is, here's the top 6 programs people use, or the top 6 programs or interest rates that you're seeing right through here when people are buying their first house. You saw that mortgage rates over there, they were down to about 7.4. They uptick a little bit on Friday. So what actually happened? Well, early part of last week, we had a person that sits on the Federal Reserve come out, and he came out on CNBC and he said, we might see inflation drop by the biggest amount ever in history. We're talking decades and decades. Okay, so that actually helped the markets. It actually drove down interest rates quite a bit. It went from 8 to about 7.4%, so almost 0.75% lower. Then in the latter part of the week, around Friday, Federal Chairman Powell came in, and this is exactly what they didn't want to happen. They don't want the markets to know, well, we as a Fed, we think that what we've done is good enough at this point. So they have to keep the narrative of we're going to keep rates higher for longer, basically to stagnate the markets. Because when somebody comes out and says, okay, we think we're okay, markets are going to rally. And that's what we saw. So Federal Chairman Powell came in latter part of the week and said, okay, no, we could still see inflation raising its ugly head. And if it does, we're going to continue to increase rates. So that's what drove up rates a little bit more on Friday. Okay, so that's one piece of this narrative. The next piece of this narrative is Moody's. Moody's is a rating agency that rates companies, countries on what their debt, the strength of their debt or the quality of their debt. The U.S., I'm not saying the U.S. is going to default on their debt, but Moody's rating agency just came out over the weekend, and here's the headline. You can see right here. Stock futures are little change after Moody's downgrades U.S. So what they came in and said, you know what, there is so much government spending right now. It is crazy. And that you guys know that I'm, the side that I sit on where I think that the government just spends way too much money on things, just giveaways. Now, I know there's areas that really need support, but there's a lot of areas that do not need that support. So let's go down and see the main reasons behind this. And you can see right through here. Moody's on Friday underscored the U.S. Is very large fiscal deficit and partisan gridlock in Washington. Okay, there's a huge deficit that we see. The U.S. has been downgraded because our budget process is completely broken. So guys, I'm not coming out with a narrative that's like, okay, I'm trying to doom and gloom all this stuff, but you have to be cognizant of your spending, especially as a government, because we don't have the money to be giving away. How do we get money? We issue bonds because we're in a deficit. We don't have enough revenue coming in to pay the bills that we have going out. So that's why we have bond offerings that are at the levels that we haven't ever seen in history to fund this government. So that's a problem, folks. Okay, so that's one piece of the puzzle. Then the other piece of the puzzle that's coming out this week in the economic calendar for the week is a huge agenda. And all this information, fortunately or unfortunately, is right in the wheelhouse of the Federal Reserve. Why do I say that? Well, the Federal Reserve has 2 mandates, in which we know the main one right now is keeping inflation under control. So how does the Federal Reserve monitor inflation? Well, they watch this, what's called the CPI and the PPI. Okay, think of the CPI as consumer inflation. That's the C part of it. And then the PPI, P, is for producers. So how much inflation is on the consumer front? And then how much inflation is on the producer front. All that data is coming in this week. Look, nothing really today, but then we have tomorrow is the CPI month over month, year over year. And then we have on Wednesday, we have the PPI, the inflation numbers on the producer level. And then on Thursday, we have initial jobless claims. All this is right around the wheelhouse of the Federal Reserve because the Federal Reserve was created for 2 mandates. One was to keep inflation in check, that's price stability. And number 2 is to keep the job market at full employment. Okay, and that's why we watch jobless claims. Okay, so this week, all the data coming in is right in the wheelhouse of the Federal Reserve. My expectations are that we're going to start seeing inflation coming down. Yes. But is it going to be enough to actually appease the Federal Reserve? I think it is. I don't think that they're going to raise rates basically in the next year, 2, 3, or 4. The next thing they're going to do is pivot and actually reduce rates. So that's my prediction on this. I could be wrong, but that's why we follow this on a daily basis. So what's going on in the markets right now based on this news over the weekend? Well, rates are a little bit higher. This is what we follow on my end. So I follow the mortgage-backed securities. The main reason why hopefully you're watching my channel, is you're trying to figure out what is in the world is going on with mortgage rates. So to do that, we don't follow the 10-year Treasury. It's a good indicator of what's going to go on. But what we follow here is right here, the mortgage-backed security. It's a bond that trades on Wall Street. Its yield is the biggest component of your mortgage rate. So what you need to understand is right here. This is the price of a mortgage-backed security bond. As this price, as you're seeing here, as it goes down, rates go up. There's a yin-yang effect, an inverted effect on this. So prices go down, rates go up. Last week, we saw prices go way up, driving rates down until the Federal Reserve came out on Friday and said, don't get too antsy on this one. We're going to still keep increasing rates if we see inflation raise its ugly head. So this week, we're going to find out all that information. I'm actually going to do an economic report every day because every day this week, we have things that are in the agenda of what the Federal Reserve is looking at. So without further ado, that is the report for today. If you're out there looking to try to maybe buy your first house, maybe buy your first investment property, or you're out there and you're like, hey, Dan, I got a bunch of equity in my house and I'm drowning in this debt. And the Federal Reserve increased rates to the highest level we've seen in decades and decades and decades. Those credit card bills I have are like 20% interest rate. What can I do? We have a lot of options. So what I need you to do is go over to therateupdate.com. This is our website. There's different ways to get in touch with us. If you want to apply now, you can hit the apply now button. Or I got one more thing for you guys to do. If you're out there and you've already locked in your rate, but you're like, hey, Dan, can I get a better rate out there? What we do here at the Frio team, we are actually a federal bank. Okay, we're licensed in all 50 states as well as Puerto Rico, but we're also one of the country's largest mortgage brokerages. We're set up with over 70 different companies throughout the whole country. We're one of the largest companies out there that does this. So if you're out there and you're like, hey, Dan, I'm locked in. Can I see if there's a better rate, maybe lower fees for me? Well, let's check it out. What you need to do is right here, there's a loan estimate tab. If you've already locked in with a bank and you want us to check this out to see if you can get a better rate, maybe lower fees, all you need to do is update or upload your loan estimate right into that tab right there. But again, if you're out there and you're looking to try to see if you can qualify, maybe, is your credit score high enough to get pre-approved in today's market? Let's see. Is your income enough? Well, we're going to check that out. And do you have enough of a down payment? Well, we might have some reprieve for you on that because we just came out with a $5,200 grant program. We just found that with a partner of ours. We're going to be offering that to you guys out there, and we're going to put some videos together to train you guys and explain to you exactly what it is. So if you're out there and you're looking for some help, all you need to do is apply now right there at the top, or you can actually call in or email me directly. So go to the bottom of our website, right through here. You're going to see all kind of blogs and tools and mortgage calculators. When you get down to the bottom, it's going to give you our phone number as well as our email address. So if you want to give us a call, you can call us at 844-775-5626, or you can email me directly at dan@therateupdate.com. Thanks so much for watching, guys. God bless. See you tomorrow. Bye-bye.